The Apostle Paul described a state of fractured agency that many find hauntingly familiar. I have the desire to do what is good, but I cannot carry it out. Our moral intentions often fail at the exact moment we attempt to execute them. This gap between intention and action is a central study in behavioral finance. When humans make decisions under conditions of risk, they deviate from rational models, falling prey to systematic biases. Temptation operates under these same high-pressure conditions. Like a trader who abandons their risk rules during a period of extreme market volatility, we often find our discipline dissolving when the internal stakes rise. To move past the frustration of Romans 7, we can view the conflict between the spirit and the flesh as a dynamic system of competing vectors, a model that provides a structured way to analyze our internal state. We can map this system using the mechanics of the foreign exchange market, where the relative strength of two opposing forces determines a single observable price. This is the SF Forex pair. The spirit, S, functions as the base currency, the value anchor that directs the system. The flesh, F, acts as the quote currency, the reactive expression and fluctuating appetites that respond to that anchor. Every word spoken and every habit formed represents the real-time price action of this exchange rate, revealing which currency is currently leading our internal economy. Approaching spiritual life as a measurable market system allows us to diagnose failures objectively. We stop viewing every lapse as a moral catastrophe and start seeing them as data points to be managed. Moving from the macro view to specific data, we find that the atomic unit of the SF pair is the daily decision. We can chart these decisions using a Japanese candlestick, which aggregates the net behavioral result of a specific time frame, from the moment we wake up to the moment we close the session. While the body of the candle shows where we ended, the shadows or wicks reveal the hidden intraday battle of competing desires. This chart shows a long upper shadow. The spirit attempted to lead the mind higher, bidding behavioral price upward. But as the text notes, sellers flashed their washboard abs. The flesh rejected this movement, forcing the price back down by the end of the session. If the rejection is total, it forms a gravestone doji. This illustrates a failed rally ending exactly where it opened. The long tail indicates the spirit tested a powerful resistance area, a deep-seated habit, but the flesh overwhelmed the market, triggering a bearish reversal. Recognizing these flesh spikes as temporary intraday noise prevents us from misinterpreting a single bad hour as a permanent shift in our spiritual identity. To find the truth of our development, we must zoom out from the daily candlestick to the macro trend, moving from isolated events to the slow construction of character. Spiritual growth is defined by a higher time frame uptrend. Even when individual days are volatile, the underlying structure begins to show a clear pattern of higher highs and higher lows. This technical structure maps to the fruit of the spirit. These are not fleeting emotions, but durable dispositions, like joy and self-control, that compound into a stable trend over years. To see this trend clearly, we can use moving averages to filter out the erratic noise of daily flesh spikes. This chart shows the 21-day moving average acting as dynamic support. It tracks underneath the rising price action, providing a floor for the trend. A flesh trend operates beneath these averages. It is characterized by broken support levels and a series of lower lows, where reactive behavior becomes the default state. In contrast, the spirit uses virtues like peace and patience as price supports. These qualities catch the soul during moments of stress, preventing a minor disappointment from turning into a deep behavioral pullback. We must accept that a temporary dip below the moving average is a standard part of market cycles. A moment of weakness is a data point, not a total trend collapse.
Repentance serves as the mechanism for a by-the-dip recovery. It clears out the emotional noise and allows the bullish spiritual momentum to resume. Focusing on the higher time frame protects us from despair. It proves that localized flesh volatility does not invalidate the long-term progress of our sanctification. While price action shows us our outward behavior, technical oscillators allow us to measure the internal momentum driving that behavior. Oscillators identify overbought conditions, states where an asset's price has soared far beyond its actual underlying value. Look at the RSI panel below. The overbought zone represents pride, our ego dangerously overextended and disconnected from its foundation. This overbought soul is unstable. Like markets correcting inflated assets, God opposes the proud, setting the stage for a sharp downward correction. The opposite extreme is oversold, mapping to a state of deep conviction and humility. This is where the ego is minimized, making the person ready for a powerful bullish reversal. This brings us to the most critical early warning sign in both trading and theology: divergence. Bearish divergence occurs when the outward price is making new highs, but the internal momentum indicator is falling. You can see the disconnect here. The price rises while the strength decays. This explains why successful believers can suddenly collapse. Their outward status is trending up, but their internal hunger for God is in a state of decay. Because God evaluates the heart over outward appearance, this discrepancy between price and momentum will eventually force a reality check. Divergence is the ultimate diagnostic. It proves that internal momentum must be monitored constantly, even when the outward price of our life looks perfect. We still face the execution slippage of Romans 7, knowing what is good but failing to do it. In the over-the-counter Forex market, humans often fail because of emotional overreaction during moments of low liquidity and high stress. Large institutions solve this by deploying execution algorithms. These systems remove human emotion from the equation, enforcing disciplined structure through predefined rules. We can apply algorithmic living to spiritual formation by treating classical disciplines, prayer, fasting, and study, as our execution systems. These disciplines act as predefined rules. They provide a structural buffer designed to constrain lower timeframe flesh impulses when we are under pressure. Fasting acts as an algorithm that shorts the flesh, reducing its volume. Prayer functions as an automated momentum booster, realigning our heart with God's will, regardless of how we feel in the moment. The repeated execution of these rules gradually alters the soul's default settings, making spiritual responses the baseline rather than the exception. Algorithmic living allows us to tighten the spread between our highest spiritual intentions and our daily, localized actions. By combining these tools, candlesticks, moving averages, oscillators, and algorithms, we create a master dashboard for the inner life. The once mysterious struggle of the human heart becomes legible. We move from guessing about our growth to managing it with precision. However, we must remember that the flesh does not become inert. It remains a contested domain of desire that will continue to produce volatility. The goal of sanctification is for the spirit to actively reprice the flesh. In a mature soul, the spirit acts as such a strong base currency that it requires a massive amount of cost, or temptation intensity, to trigger even a minor fleshly response. By tracking our behavioral candlesticks and respecting dynamic support, we learn to navigate the noise of daily life without losing our orientation. We cannot eliminate the volatility of human existence. But by mastering the market microstructure of the soul, we transition from reactive impulses to a sustained higher timeframe trajectory toward life and peace.